Good morning, everybody. It's Wednesday, December 4th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 1 3/4 at 421.5. January soybeans were down 5 3/4 at 986, and December Chicago wheat was up 4 1/4 at 541. This morning we had an export sales announcement of 30,000 metric tons of soybean oil to South Korea, and that was for 24. We can probably kick it off there. Justin, I thought you had kind of an interesting stat we were talking about before we came on the show, just in terms of the business in oil that we've done. I know we've talked about this market continuously, but we still continue to see, solid business, and we don't have much of it. So maybe a few thoughts to start the morning.
Yeah, thanks, Dan. Kind of broken record again. We keep selling oil. We've already sold a far greater amount on the year than the government has us written down for the entire year. So, the year ends next October, and we've already sold, probably approaching 200% of the total government export number estimate. So that's going to have to change dramatically on, I would think on, coming report here, even December report, they should change it at a minimum to what we've sold as of today. Huge demand there. Obviously a lot of spec selling, people selling because of this, Z45, this unknown guidance on some of these biofuels initiatives. Two different articles, what's really messed with the markets yesterday. One coming out on Reuters that they're not going to have any guidance by the deadline of Jan 1. Broke the oil market 100 points. Another one came out after that, Bloomberg, saying yes they are, rallied at 100 points. So just highlights the difficulty of government programs and relying on government data for some of these huge initiatives. So that's still the issue. As I said before, on the upside, we've sold it off so dramatically in anticipation of some removal of biofuels that it's now the cheapest oil in the world, and we've used up a lot of the world oils stupidly in our by subsidizing imports. But also you look at all these other countries, Malaysia, Indonesia, huge biofuels initiatives that they're doing. B40, they're putting export curbs on their palm oil exports. So the world veg oil market's gotten really tight here. I kind of think it's a good story if Z45 was to go through. You almost couldn't support it with enough oil. So kind of interesting that we're taking that much value out of the oil market. Just to recap, we're less. We were over 90 cents a pound a couple of years ago. We're at 40 cents now, 41. So we're very cheap, no matter how you look at it. So we'll see. Again, if investment funds want to go get short a record amount, it'd probably go lower. But we're selling it every day into business. So I think that's not a great risk reward for them. That's really the only thing I really see in the complex. They are record short meal. We talked about that yesterday. I think rightfully so. So it's interesting that they're record short meal, but also been selling oil because of this biofuel stuff might go away. You would think they'd be short covering meal if that was really the opinion. So it could just be an overall bearish tone to the bean complex in general. And if beans keep getting sales from South America and from hedge funds, fund shorts, they have to sell the complex. So maybe you're just getting spillover selling into the oil complex just because if beans are cheap, oil's historically kind of expensive to beans, so they figure might as well sell oil. So might not even know about any of these things that we're doing. It might just be a chart. Charts don't look great. So you could just be getting plenty of technical selling too.
Where are you going to find the meal demand, Justin, in your opinion, if you were to? I mean, what can you do to support that market in the slightest?
Well, certainly, animal numbers, are, hogs, cattle, those, have good margins. I mean, Rylan can talk more about that, but I would assume we're feeding as much as we can to, cost of gains got to be relatively good here, especially in hogs and some of those things that use high meal. second, you're gonna have to export it. You know, the problem with that is the rest of the world, can they expand enough to absorb that total meal consumption? And that's kind of the conundrum I see if this biofuels things continue. And I find it hard to believe that we've done dumber things, so don't get me wrong, but we've invested a whole lot of money over the last few years. So maybe it becomes a blunder and they decide not to do it, but all these other countries are still going that way. So I don't think it's going away personally. Maybe it doesn't go to the levels where we completely run out of oil, because that just can't happen, right? The markets need to fix themselves to that. But I do think there has been some kind of a permanent shift in that oil meal relationship. You've seen people plant higher oil or higher oil share contents, higher oil soybeans, more canola, things that have a higher oil content than meal, which I think will continue as well.
So, Ron, that is a good point. I mean, do you see the expansion on your side that's going to support, this excess meal that we could potentially be looking at?
I mean, if you kind of take China at their word right now, I think that's where most of the focus is going to be. They've been doing pretty much all they can to kind of reduce capacity to normalize their hog prices right now. And they just came out recently and pretty much said that their sow herd now stands at 40.7 million head. That's down 3.2% from this time last year. So, I mean, like, they're actively trying to control that supply situation. I mean, I don't know how enforceable all this is, but like, we're starting to see that, I think that's starting to dig into it to some degree if they're actively trying to kind of throttle the pace at which they produce hogs in their country. So, I mean, like, obviously we're a little bit on the tighter side as well right now. We'll get better numbers kind of later for the next hog and pig report to see that. But at this point, I mean, it feels like we're kind of doing what we can to restrict the hog supply kind of worldwide right now. I mean, we've got $90 hogs versus last year, which is like in the 50s, mid 50s. So I think things are a little tighter this year. I think there's kind of less head to go around right now, just from a supply standpoint.
So, Ryland, will they feed each head more though, because margins are good? Like, would you try to make each of them heavier?
Well, I mean, like, that's one way to do it. I mean, like, and I think that's typically what we do in this country. It's like, when feed is cheap, you'll feed them with a shovel. When the old adage, you feed them with a shovel. When it's expensive, you feed them with a teaspoon. So, like, we're probably going to add more weight to each animal with cheaper feed at that rate. I mean, one problem that they have is controlling the output from the sow, just getting, more and more pigs per litter. That's kind of what we faced, at this point in our country as well. So it's hard to really say if that's going to be able to clean up, this extra meal.
Oh, very good. Let's transition right into livestock there. We had a strong performance across cattle and new contract ties for hogs. So a couple of thoughts there, Ryland, as we come into the open.
Yeah, I mean, cash wise, some bids posted at 190 in the north. There was even some rumors of some trade. So I think that overall it's still pretty supportive. We pretty much got back what we lost on Monday here from in February. And right now we're coming into December, option expiration on Friday, then first notice day on Monday. So it seems like you're just going to see a little bit of a capital shift right now. And especially the roll. We're still seeing a lot of those longs for December that aren't going to be taking delivery, rolling out to February, rolling out to April. So overall, it's pretty supportive, all things considered. But we did see beef prices take a little bit of a tumble yesterday. Choice was down $2. Select was down $1.60. So maybe a little bit of concern on that front, and just really the lack of cash trade could just create a little bit of caution. But overall, I think the market's still pretty optimistic that we can see maybe a little bit better prices than last week. Asking prices for cash are 192 to 194. So we'll see if Packers are willing again. They kind of came after it last week ahead of the holiday, and we're just kind of back to a normal schedule right now. So it feels like that they easily could if they're willing to spend the cash. So I think all eyes are on that right now. On the hog side of things, yeah, I mean, overall, you really haven't seen a significant setback here. I mean, we rallied late. We did kind of fall back towards the open, but there really hasn't been a good reason to sell the market at this point, outside of just profitability. Overall, just from a speculative standpoint, seems like that news out of China, the conflict with, potential conflicts with Mexico and tariffs, have all been really supportive. So we did see bellies take a turn, though. Bellies were down pretty sharply yesterday, down 14.60. So maybe you got a little bit of concern, but still nothing to really shake out. The market's still a little bit overbought here. And on the high side of cash yesterday was 90. So, I mean, these are numbers that are summertime kind of prices that everybody's getting for hogs. So it just seems like, it's a gravy train right now. Hopefully it lasts a little bit longer than we'd expect. But yeah, I mean, they're just all the news is still pretty friendly out there right now.
So Ryland, why do you, we were talking about this a little bit yesterday, but obviously there's Cargill layoffs. You're talking about some Tyson layoffs. Is it different in the, the chicken portion of their industry? Why would they be seeing layoffs with these kind of big margins?
Well, so, the real problem right now that especially Tyson kind of citing that margin wise, that overall they're paying top dollar for cattle right now. They're struggling and to make money on the beef side.
Is it the Packer side or the?
Yeah, the Packer side. So,
Okay.
I mean, like their margins just are not good for beef. They said it's been losing them money for the past couple quarters now. I mean, obviously we're seeing those retail prices at record highs. So I don't think we're moving it on the street as much as we possibly could. I mean, some of the features, yes, but otherwise it's not really burger time, and we're seeing 90s start to fall. So overall, it just, we're getting to that level where high prices, start to really dig into those margins. So that plant that just shuttered in Emporia, Kansas, they were citing that it used to be a kill facility back in 2008, now is dealing with marinated proteins and ground beef, and just their margins weren't good on it. They were losing money on the plant, so they're shuttering it. And I think this is a problem in most of the beef kind of packing facilities right now, is that there may be struggle a little bit for profitability, where margins for hogs, maybe on a little bit better, margins for chicken maybe better. Those are really what's keeping them afloat on the beef side of the market.
Oh, very good. We appreciate the update there, Ryland. We'll keep an eye on all of that. A couple of things to point out. We've got we'll have export sales out tomorrow morning, 7:30 Central. So we'll take a look at those and discuss those in the war room. Also, a couple of things to mention next week, Wednesday, December 11th. We've got a couple of exclusive webinars that we're going to be putting on. One for AgYield specific clients. That's at 10 o'clock Central. It's going to be focused on government programs and crop insurance and what we can look forward to here in 25. And then at 12 o'clock Central, we've got open to everybody webinar. It's going to be with a couple of special guests in the banking sector. We're going to visit about financial services, being prepared to visit with the bank, and what they're looking for also as we go into 25. So be sure to register. You can, the link is in the description. So go ahead and get registered. And we look forward to talking with everybody there next Wednesday. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. It'll keep you up to speed on everything AgYield, and certainly these special webinars that we put on periodically. So it'll keep you in the loop there. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. I hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.